Investment planning is not just about envisioning your future. It's getting the right expertise to do so. At Volition Cap, we'll help you create a 5-year plan for financial freedom. So go ahead, secure your future by consulting an expert. Book an investment planning session today. Volition Cap, democratizing wealth. My name is Subomi Plumptre and I'm a director at Volition Capital Investments Limited. About 10 years into my career journey, I discovered that I would be poor if I ever stopped working. My salaries weren't going to make me rich, but it was what I did with those salaries by way of investment that would determine the kind of lifestyle that I lived, thereafter. So in about a 1-year period, I went on an active journey to learn about investing. So what I've done with this course is to put together my entire body of investment knowledge into an easy to follow format. So you're going to watch videos that talk about each of the different investment platforms that I've experientially tried. Please take your time and learn about the course.
Hello, my name is Edith Young. I'm an entrepreneur in technology, advertising, and film. You may have seen me on CNN as the director of Nollywood's biggest film yet, The Black Book. To make The Black Book, we had a chicken and egg problem. We had to make a film that was big, profitable, so that investors be attracted to it. And of course, we needed investors to invest in this film that we're going to make. It was a chicken and egg problem. Volition made that easy for us by bridging the gap between the chicken and the egg in what we pitched as the most ambitious film projects ever done in Nigeria. Volition came through when we needed them most, which is why they are already on our cap table for our next slate of projects. They understand the industry needs and flow up in a way that ensures that not only art is created, but investor interests are protected. Volition's conviction in investing in the creative industries match our ambition of telling the next generation of African stories. That's why we are together marching into the future.
Unleash collective prosperity. Are you weary of investing in solitude? Do you yearn for the vibrant synergy of a community of like minds? Then look no further. In our investment family, we'll teach you about education endowments for your beloved children. We'll discuss seed funding for business or relocation. We'll also explain the path to early retirement and financial freedom. Secure your place in our community today. Vizient Group. Create purposeful wealth.
My name is Akinla Adewale. I work in the private sector. I will say I'm also an investor and an entrepreneur. I'm married and I have 2 kids. It was Subomi I first met in 2017-2018 through our social media handle, and I booked a session with her, an investment session, and I have been with them since then. Volition has actually provided a means to meet that goal, to have my money work for me, even when I'm sleeping, even when I am doing other things. I've been a beneficiary of their platinum portfolio because it has helped me to meet my financial needs effortlessly. That is the top for me. We had a session and I told Subomi, this is what I am expecting. This is what I want. How do we make it work? And she went back, then she came back and said, okay, if this is what you want, this is what we need to do. And we started, and gradually the dream is coming to reality. Most of my investment right now with them, with Vizient, is in the platinum purple. And that is where your portfolio is designed in a way that suits your need. I am able to meet 75% of my non-discretionary expenses through them. For me, that is a big win. It's something that I appreciate, something that I like, and it's something that I want to continue.
Good morning, good afternoon, good evening, everyone, depending on where you're joining from. You've just joined the More Than Money webinar, a powerful platform where we share practical insights to help you make confident, informed investment decisions. My name is Hepzibah Baja, and I'm delighted to be your host today. Thanks for making the time to be here. Let's get to know each other a little. Please drop your name and where you're joining us from in the chat. We'd love to say hello. For me, I am joining from Lagos, Nigeria. Please feel free to tell us where you're from and your name, where you're joining us from. Well, welcome, Bayani from Zambia. We are really glad to have you here today. Hi, Praise from Port Harcourt. Hi, Renee from Abuja. Hi, Dami from Nigeria. I can see Aniet here. I can see Cynthia from Nigeria. Hi, Benjamin from Canada. Hi, Jumoke from Lagos. Hi, Ayo. Hi, TI from Nigeria. Hi, Joy from Lagos. We're really happy to have you guys join. Please feel free to invite other people to this webinar because I can assure you that it's going to be a very insightful one. It's not too late for other people to join. So this webinar is probably brought to you by Volition Cap, a trailblazing asset manager that's helping Nigerians and diasporans build sustainable wealth. We are the first to launch an investment club in Africa inspired by the cooperative model. In just 3 years, over 3,000 of our members have achieved up to 75% financial independence. That's the kind of transformation we are passionate about. And we can assure you that before you end this webinar, you will leave this place not the same. So the topic that we're looking at today is commercial papers, risks and rewards. So you've probably heard a lot about the surge in commercial paper investments. Well, you're going beyond the headlines. We'll explore the real risks, hidden opportunities, and the smart strategies you can adopt to make better financial decisions. So we're going to share an interactive poll with you. And before we join this main session, we would like you to engage with this poll. That way we can know where to, know our audience better. So the first question here is, have you ever invested in commercial papers? So if it's yes, regularly, please notify us by tapping on yes. If it's once or twice, let us know. If you haven't before, but you're interested, please let us know. And if you don't have any idea what they are, please let us know. This poll will be going down in the next 1 minute. And in 5, 4, 3, 2, 1, we are done. So according to the result that we have here, it says that 46% of us do not know anything about commercial papers, but we are interested. And 13% of us said yes regularly, which is quite interesting. And that's 15% of us said once or twice, and 26% of us said they don't know what commercial papers are. But that's the best part of this webinar. We would get to know more as we progress. Now we'll look at the second question. So what's the biggest concern about investing in commercial papers? Is it risk of default? Is it lack of knowledge? Is it low transparency? Or not sure where to find them? Please let us know. Tap on whichever one that resonates with you, and then we'll get to know our audience better. This will be going down in the next 1 minute as well. 5, 4, 3, 2, 1. Again, according to the results here, the highest on the poll is lack of knowledge. 48% of us said we don't know, or our biggest concern about investing in commercial papers is because we don't know much about commercial papers. And 35% of us said risk of default, low transparency, and not sure where to find them. Thank you very much for engaging with this poll. We love your answers, and I can assure you that as we progress in this webinar, all your answers will be, all your questions will have answers. So now let's get into the heart of today's session. If you have questions at any point, please drop them in the Q&A box. That way we don't miss any of your comments. And before we bring our keynote speaker, please watch this short video introduction.
Subomi champions middle-class prosperity in Africa and the diaspora. She believes this social group is critical to driving economic growth in Africa and designed a fund management model that leverages traditional African cooperatives and remittance investing. Subomi is a licensed fund manager and the chief executive of Volition Cap. With over 25 years of strategy, branding, and marketing communications experience, Subomi has trained thousands on investing through her online courses. She sits on the boards of Opportunic Global Fund, Alder Consulting, and Music Business for Africa. She is a published author, Acumen Fellow, Bellagio Resident, Gates Foundation Goalkeeper, and a member of the adjunct faculty of the University of Lagos. Ladies and gentlemen, please welcome our keynote speaker, Subomi Plumptre.
Okay, everyone, thank you so much for joining. Hopefully this will be an educational session. I love webinars because it gives me a chance not just to share, but also answer specific questions. So I would encourage you, please use the Q&A box as we go along so that we can track the questions. Sometimes when you put the questions in the chat box, it just becomes difficult for us to coordinate and to respond. What will then happen is, as this webinar is going along, the questions we can answer immediately in the Q&A box we'll begin to answer, and then the ones we need to answer live, we can then answer those questions live. So thank you so much from wherever you're joining us. I can see people from Canada, people from Nigeria, people from Zambia. It's always a pleasure to be among investors, potential investors, people that are just maybe interested in learning about investing. I always tell people that one of the things I'm really passionate about is helping honest and hardworking people create wealth. That's a passion, of mine. That's my life's work. That's my calling. And that's because when I was in the corporate world, for 20 years, and the prevailing thought or the prevailing ideology is that you could never create wealth through working for others. So again, it's an African thing. People always assume if you don't start your own business, you can never become financially free or financially independent. And I was able to turn that myth on its head by proving to people that it is possible to create wealth as an entrepreneur or as a corporate person working for someone else, and then take that wealth to create something new outside of that environment. So it's something I'm always passionate about helping people do, because I know there are some people who don't want to become entrepreneurs. There's some people who don't even know how to be entrepreneurs. There's some people who literally just want to, have a great career, and they want to create enough wealth to then live a prosperous life after, you know, the work has been done. So it's been a passion of mine, and it's why I'm always teaching and training about investing, training about wealth creation, and giving people practical tools as well to create the wealth. So when commercial papers started trending in Nigeria, I thought it would be a good topic to talk about because we've kind of seen wave and wave wave after wave of different investment products in Nigeria, some legitimate, some not. So we've seen there was the whole agri-tech wave that happened a couple of years ago, and the bubble eventually burst during COVID in about 2020. Between the years of 2020 and 2022, we had a lot of agri-tech businesses going bust. A lot of people lost their money. We've also seen the wave of illegal Ponzi schemes like MMM, CBEX. So it's almost like in Africa, there's always something trending in the investment space. And I thought it would be good to address commercial papers head on and take your questions and really just explain what is the structure of a commercial paper, who should be investing in commercial papers, and what are the risks, and of course, what are the rewards of investing in commercial papers. So that's what we're going to do today. So I'm going to share my screen and take us through a brief presentation to provide context. And then once I'm done with the presentation, I'm going to take questions. We're just going to open up the floor and answer your questions. So let me share my screen and then we'll begin. Okay. So this is the outline. We'll start with definitions. Let's have a common understanding. What is a commercial paper? We'll look at some of the popular companies in Africa that have offered commercial papers. We'll look at, who are the notable issuers of those commercial papers, look at the difference between discount yield versus implied yield so that you really understand what is the return on your investment. So without using technical financial speak, okay, so I think there was a break in transmission. I apologize for that, and we'll go along. Sadly, depending on where you are in the world, chances are your electricity will either go off or your internet might blink when it's raining. And it happens to be raining at the moment. So I apologize for that. So let me share my screen again. I'm not sure where you left me, so I'm going, or where I left you. So I'm going to go back and just rewind a little bit. And then we'll take it from there. So what is a commercial paper? So a commercial paper is an unsecured short-term debt instrument issued by corporations to finance their immediate needs, such as working capital. The simplest way I can explain it is a company taking a loan. That is the simplest way I can explain it. But instead of taking a loan from a bank and putting down collateral, the company comes to the general public and they say, this is who we are as a company. This is what we're trying to do with the money that you borrow us. Can you give us this money without collecting any collateral from us for this period of time? So unlike when you go to a bank to take a loan, a lot of times commercial papers are unsecured. So it means there is no collateral that the company puts down. But the public, based on the company's reputation, based on the company's track record, based on the company's cash flow statements, the company comes to say to the general public, I need to borrow money to finance my day-to-day operation. So I need working capital. Can you please borrow me this money for 9 months or for 6 months or for 12 months? And after that, once I've used the money to finance whatever it is I want to finance. Maybe I'm building a new factory, I'm purchasing equipment, I'm expanding, my capacity, whatever it is. Once I'm done with using your money for those activities, I will pay you with an interest. That is, in simple terms, what a commercial paper is. So the 2 points you need to note is that it's debt. The company is borrowing money. And it is unsecured. A lot of times there is no collateral behind that. So you're literally banking on the company's reputation. You're banking on the due diligence that would have been done by the rating agencies. You're banking on the due diligence that may have been done by the asset management companies that are floating that commercial paper on behalf of the corporation or the company. So those are the things you're banking on. It's not because there's any collateral sitting anywhere, and you're banking on the company's capacity to pay back the loan based on its cash flow. So that's the simplest way I can explain it if you don't have a technical background. So why do companies offer commercial papers? They do it because they need quick access to capital. So for example, we all know if you go to a bank to try to secure a loan, they're going to ask you for collateral, they'll ask you for your grandmother's kidney, they would ask you for your birth certificates. You know, I'm just exaggerating, but going to a bank to access capital is not a simple process. So a lot of companies, because they need quick access to capital, they then, you know, are thinking, what are the alternative ways we can raise this capital? Commercial papers typically have lower interest rates than bank loans. There's no collateral requirement for a lot of commercial papers, so that's also an easier way, you know, to borrow money without having to put down any assets. There's a flexible repayment timeline. Some people have, you know, repayment timelines that last a couple of months. Some, you know, last a couple of years. But it's really flexible depending on what you put out and what people are willing to take on. And companies typically use commercial papers to raise cash flow for their, you know, day-to-day operations. So a very few times will you see a company using a commercial paper for non-working capital, because it's the cash flow they're going to use to repay investors. So a lot of times they need to use, you know, issue those commercial papers for working capital, things that are going to create almost immediate cash flow. Now, what are the characteristics of a commercial paper? Typically ranges from 15 to 270 days. So a lot of investors like it because your money is only kind of locked in, you know, for months. So unlike traditional investment instruments where typically you have a 12-month timeline, commercial papers are liquid, and after a couple of days, you kind of get your money back if everything, goes well. So investors like it because the tenor is quite short relative to, you know, some other investment instruments. Can be issued as a discount or as interest-bearing instrument. So for those who are familiar with treasury bills, you know that if you, for example, buy a treasury bill, quote and unquote, your interest is paid up front. And at the end of the period, you just get your capital back. So a lot of times they've taken out the interest as a discount upfront. In terms of just, you know, issuing that instrument. So if you've bought a treasury bill before, it's almost like the same reasoning for some commercial papers. And some are interest bearing, so you have to wait till the end. And then maybe at the end of your 270 days, your 9-month period, you get your money back with the interest. So depending on how it's structured, you either get your interest upfront, so you pay a discount, or you get your interest at the end. You get your capital and your interest at the end of the period. So just pay attention when you're, you know, reading the prospectus for a commercial paper. Are you getting your discount upfront? So you're almost, quote unquote, your interest upfront, or are you getting it at the end? So if you're getting it upfront, the amount of money you're paying will be less the interest. And if you're getting your interest at the end, you're paying the full capital, and then you get the interest at the end of the tenor. Commercial papers are typically targeted at institutional investors and high net worth individuals. And why? Because it's debt, so it requires it requires the investor to be informed. You must be a knowledgeable investor. So debt is not a retail instrument. When you're borrowing a company money, it's not for the average uninformed retail investor, because it's high risk. Anything that has to do with debt anything that has to do with an unsecured debt, so no collateral, it's actually a high-risk investment, particularly in this part of the world, because it, if anything goes wrong, there are not a lot of you don't have a lot of legal recourse. You're not going to be dragging a blue chip company if they don't pay you back your money as a retail investor. But as an institutional investor, I can drag a company because I am also a company, and I have the legal resources and I have the structure, to go after a company if they default on their obligations. But as a retail investor, you don't have that capacity. So it's typically anything that is a debt instrument, you don't have the capacity to do your due diligence. So a lot of times debt instruments are for institutional investors, large organizations, or pension funds, really huge, asset management companies, or high net worth individuals that are informed investors. And because they know that that amount is like 2% of their entire portfolio, if anything goes wrong, they're not going to cry about it. They've already priced in the risk, upfront before they invest. So please note that ideally, I know in Nigeria, we tend to just do whatever we like, but a commercial paper is not supposed to be offered to retail investors. It's really for high net worth individuals and institutional investors. In Nigeria, commercial papers are regulated and quoted on platforms like the FMDQ exchange. So they're actually, SEC regulated. So that gives a bit of comfort because at least, there's some governance around it. There's some, it has to go through some sort of regulatory framework. They are offered by, issuing houses that are registered, that are regulated. So it kind of gives at least some measure of comfort that a regulator is at least involved in what is going on. But because it's still unsecured and it's still debt, and because you went into it with your eyes open, you were not deceived. So even if anything goes wrong, what are you going to say? You signed a waiver to say that you understood the risk and that you actually bought the commercial paper knowing the risk, so you're supposed to be an informed investor. So there's really no recourse if anything goes wrong with the commercial paper. These are some popular commercial papers that have been issued in the past, well-known names. So like I said, you're buying into the reputation of a company, you're buying into the track record, you're buying into the cash flow, the asset base of that company, that if these guys have been around for decades, chances of them going under are quite, slim. So because of that, that is what you're buying, the reputation of a company. This is what I was saying about implied yield and discount yield, that a lot of times when you see a commercial paper, ignore the implied yield and look at the discount yield. That is really what you're going to get at the end of the day. So if you see a commercial paper that is saying 27% and you see implied yield, ignore that. Look for discount yield so that you can see the actual money that you're going to get at the end of the tenor. That is the figure you should go with. So please just know when you're reading the prospectus, look for the discount yield. Now, what are the components of a CP prospectus? You would have the issuer profile, the terms of issue, how many days, how many months, what is the discount yield, that's the return on investment, what's the credit rating. So you will have a ratings agency give you a report. I always encourage investors to read the reports. There was a particular commercial paper that was being offered by a well-known organization. And when I read the report by the ratings agency, typically the ratings agency will be like an Augusto and Co. So they would have looked at the books of the company, the financial statements of the company, looked at their corporate records, and they're delivering an opinion, an expert opinion. So that's part of the due diligence that goes into issuing a commercial paper. A ratings agency will deliver an opinion based on your corporate reports. So when I read the credit rating report and I read the risk disclosure, what it said was that the company was raising Naira to fund a dollar equipment purchase. Immediately I saw that was a red flag, because you're actually raising Naira you will then be subject to currency risk. If the exchange rate moves against you suddenly, you're going to have to pay in dollars for that equipment. Meanwhile, you raised the fund in Naira. But if the dollar doesn't move against you, then it's to your advantage, because when you're then paying investors back, if you're earning money in dollars, then you're going to be paying at a cheaper rate, because if the value of the Naira relative to the dollar crashes, then at that point, you're in favor. But if the Naira strengthens, problem. So immediately I saw that Naira dollar, like you're using Naira to fund a dollar equipment purchase. For me, it was just a red flag that is a mismatch of currency and a mismatch of funds. And if anything goes wrong, then the company may or may not be able to pay unless it's earning in dollars. If it's not earning in dollars and there's anything that goes wrong with the currency, the rate of exchange, then that might prove. And it was right there in the risk disclosure. They actually disclosed it, so it wasn't hidden, But again, because a lot of uninformed investors won't read the fine prints, because those risk disclosures are many pages long. So if you're going to read a prospectus, it means you're ready to read and you're ready to actually go into the details and find the information. So a lot of times, if you're not ready to do that work of reading, it's really not the right instrument for you, which is why, again, commercial papers are typically for institutional investors, because they have people who read those reports on their behalf. The company profile will be there, so you will see information about the company. Who are they? What's their track record? Do they have any cases in court? You will get a lot of information in a typical prospectus. It will also include the non-guarantee clause. So this is what I was saying, that if anything happens to a commercial paper, SEC is not going to do anything about it, because you've actually read the clause that this is a non-principal guaranteed instrument, and you went into it with your eyes open. So all those clauses will be there. So please kind of just, when you read a commercial paper prospectus, don't read the deal sheet. The deal sheet is 1 page. Don't read the 1-page deal sheet. Ask for the actual prospectus, which is multiple pages. And that is what you should read, because it then has the credit rating report, risk disclosure, non-guarantee clause. All of those things are in the actual prospectus. But the deal sheet, which is what most asset managers will send you via email, you're just going to see that 1 page, and but they will put a link. So they actually will put the link to the prospectus in the email, and it's your job to actually click on the link to read the full prospectus. We've talked about this: implied yields, discount yield. Pay attention to the discount yield, not the implied yield. We've talked about all of this: non-principal guaranteed, company reputation. Now, what are the risks associated with a commercial paper? I've spoken a little bit about this when I gave the example. Typically, liquidity risk. Let's assume the company finances a project, but the project doesn't immediately begin to generate cash flow. Then that affects the company's ability to pay back investors. Currency risk, we've spoken about that. If you raise a Naira using a commercial paper, but you're using it to pay for a dollar-denominated activity or project, if anything happens in terms of the exchange rate and you're not earning in dollars, how are you going to pay for that exposure? Market risk, anything could go wrong because it's working capital. You're using it to finance a company's operations. What if something happens in the country, or and at that point it affects everybody? But what if something happens in that industry? So maybe you're a company within the manufacturing industry is raising a commercial paper, and maybe something happens in terms of the electricity grid or something, and then the cost of operations suddenly just skyrocket. So these are all the risks that are involved in a commercial paper. Regulatory risk, not so much, because again, before you can issue a commercial paper in Nigeria, for example, you have to go through a regulated process. So at least you will be issued a professional rating report. You will be issued a professional opinion. So to that end, commercial papers are well regulated, but it's just investors must be ready to read those disclosures and read those documents. But what are the rewards? Higher yields than traditional savings or treasury bills. So of course, if you're earning 24% on a commercial paper, 25%, you're already earning higher than the typical money market, fund rate. So yes, it gives you an opportunity to earn more. And because the time frame is shorter, but please run the numbers. So for example, if I have a 270-day commercial paper, that means it's a 9-month commercial paper. So even if it says 24% per annum, it means that what I'm actually earning at the end of 9 months is actually 18% because it's prorated. So if it's 24% per annum, so 24% in a 12-month cycle, for that 9-month period, what I'm earning is 18%. So you're prorating it over the length of time that the commercial paper. So it's not 24% overall in 9 months. Please pay attention when you read the prospectus. If it says 9 months and the yield is 24% per annum, then prorate it based on 9 months so that you can know what you are actually getting at the end of the period. A lot of investors use it to diversify. So if you already have a money market fund, maybe you have a dollar fund, you have a fixed income fund, and you're thinking, oh, what else can I put in my investment portfolio? Then it becomes a good diversification play, because what you're doing is maybe just 5% of your entire portfolio is in commercial papers. So you can afford the risk. So if you know you already have 20% in fixed income, another 20%, in the money market, another 20% in real estate, then 5% in the commercial paper is an acceptable range of risk. So it's a good way to just diversify your portfolio. It's not where you put all your eggs. You can't put all your eggs in a commercial paper. It's just one of the many investment instruments that you can put your money in. So let's see how commercial papers stack against other products. Because we run an investment club, I've also provided just a comparative so that you can see what our investment club provides as a principal guaranteed Naira offering vis-a-vis all the other offerings that are available. So you can see commercial papers do quite well, about 23 to 24%. That's the current range in Nigeria today. Some are less, some are, but really the highest you're going to get is about 23, 24% by the time you look at the discount yield. Mutual funds are ranging between 20 to 23. So if you invest in a mutual fund, very flexible, you can take your money out after 30 days. So mutual funds right now are the most flexible investment instruments that you can get in Nigeria, because the minimum holding period is 30 days. And after that, you can take your money out at any point. But obviously, the shorter your investment is, the lesser your return, because mutual funds assume you're going to keep it for the entire 12-month period. So if you take your money out earlier, you're not going to get a higher end of the return. But if you have some money and you don't know what to do with it, and you only have a short amount of time, then a typical money market fund is a great idea. Treasury bills, depending on whether the government needs money or not, they tend to take up the rates whenever they need money, and then when they don't need as much money, the rates drop. So again, it could hover between about 18%, depending on what time of the year it is. Good thing about treasury bills is you pay at a discount, so your interest is paid upfront. You just pay less the return. For our investment club, Vizient Group, which is managed by us, SEC licensed company, our Naira rate, we offer a fixed income fund. So it means your funds are fixed for 12 months. So it doesn't give the same level of flexibility as mutual funds, but we give a higher rate to compensate for that. And then let's look at USD. So for a commercial paper, it's subject to variations in the exchange rate. So if you are lucky to invest in a commercial paper, say when Naira was 1,500 and Naira remained steady for a couple of months. Remember, there was a time Naira was stable, before oil prices tanked. Naira was actually very stable. So let's assume you had brought in dollars and invested in a commercial paper at 1,500 and Naira remained stable for 9 months. You're going to earn, and then you quickly changed it to dollars at the end of the 9 months. You would have earned about 25, 24%. That's sweet. So that only works if Naira doesn't move against you, which is why it's for sophisticated investors who know what to do and who can control their currency risk. Euro bonds, depending on which government is issuing the Euro bond, it can be as low as 9% and go as high as 20% if it's a very high risk Euro bond. Our dollar fund that we offer as a SEC licensed company is ranging between 13% to 20% in USD per annum. So these are just comparatives so that you can kind of look at what is available in the market and come to an informed decision. So at this point, I'm going to stop to do a Q&A, but I'm going to leave the QR code for a couple of seconds or a couple of minutes, just so that if you have more questions, if we're not able to answer all the questions today, come to our WhatsApp community. We answer questions all the time. So even the idea of this webinar came because of the questions we were answering in the WhatsApp community. I am on the WhatsApp community, so I always answer questions that come my way. So if you want to join our WhatsApp community, please scan the QR code. If you want to join our investment club and just see what we're offering, you can also scan the QR code so that you can, kind of look at our investment club. So I'm going to stop here. I'm sure the links would also be put in the chat box. So if we skip this section and we move on to the Q&A, you will have the chance of, then just clicking on the link within the chat box to get a response. So I'm going to stop here and then hand it over to Hepzibah, just in case there are questions. And then I think we're going to be done for the day.
Thank you, Subomi. So the first question we have here is, what is the point of the company stating the implied yield if it's not important to us as investors?
Okay, so because there are all sorts of considerations in terms of the yield. So in some cases, there are fees, there's withholding tax. There are all sorts of things that go in, the management fees for the asset management companies, the fees that are due to SEC, the fees that are due to the issuer, the fees that are due, to whoever it is that is helping to distribute that product as well. So they've kind of accounted for all of that. But because they want to be transparent, they have to tell you the actual money that is coming to you. So that is why the discount yield is also provided. So please just it's like the same way for a company, they'll tell you gross and net. For an asset management company, they'll tell you this is a gross yield, but this is the net after fees. So that's where you kind of just know what the rates are. So I'm going to just, because I've answered some of the questions that are related, I'm going to dismiss maybe the questions that are similar to questions that have already been answered. Okay. I'm also seeing some other questions. Does a company need to be liquid for a CP investment to go bad? Or can the CP investment go bad while the company is still in operations and the investors simply lose their money? So typically, companies are not going to renege on a commercial paper without a reason. And that's because their reputation is at stake. So for example, if a blue chip organization just begins to default on its obligations, that's a bad signal. It can even affect other parts of their business, because if you renege on a commercial paper, it shows you're not credit worthy. So it means even your cost of funds will go up dramatically because you have proven that you are not credit worthy. So that's why even governments very rarely would they renege on a Euro bond offering or a government bond? Because if a government reneges on its obligations, its credit rating is going to crash. And it means that the cost of borrowing in future is going to be prohibitive. So companies rarely, blue chip. The problem I have is right now in Nigeria, you're seeing commercial papers being offered by unknown organized companies. Like we don't even know who, like you will see a company offering a commercial paper and you'll be wondering, who is this company? Like I'm hearing about them for the first time. They are in no way a blue chip organization. So that's my problem with commercial papers, that it's just become this sexy instrument that everybody is using to raise money, whether they are blue chip or not. So I would say that go with blue chip companies, because blue chip companies have something to lose. They have their reputation at stake. Don't invest in a commercial paper if it's just a random company off the street that does not have a name and does not have a reputation to protect. So that's why read the prospectus, find out about the company, what's their reputation, what's their history, read their annual reports, have they been around for a while, you know, all of those things. But for blue chip companies, yes, blue chip companies would rarely, you know, I'm yet to hear of a, you know, really blue chip company reneging on its commercial paper. So I want to put that as a caveat, that if you're going to invest in commercial papers, please go with a blue chip organization. So that's just to answer that question. So I've answered that. Mutual funds and commercial papers are different. They don't have the same risk profile. So for a money market fund, you know, a mutual fund can be a dollar fund, an equity fund. It just simply means it's a pool, it's an investment pool where the asset manager has selected the assets. They've pre-selected the asset for you. So instead of you having to buy the individual assets, you just buy the fund, the mutual fund. So that's simply what a mutual fund is. It's just a collection of different assets in a bucket that an asset manager has already pre-selected for you. So typically, if it's a money market fund, it means that it's invested in very low risk assets, you know, government bonds, and things. Commercial papers might be there, but maybe just a small amount. But it's mostly, you know, money market funds, treasury bills rather, and government bonds. So it's typically low risk. But if it's a mutual fund that is a dollar fund, then those are high risk assets, because the underlying assets are stocks. So the risk profile is dependent on the type of mutual fund that you're investing in. In the event a company is unable to honor its obligations, there's nothing you can do. They will renegotiate the timeline. That's the worst that will happen. So if it's a company that is honorable, they will just renegotiate the timeline. So they'll probably just say, oh, we borrowed this money for working capital and maybe our equipment came late or we're not able to pay at this time. Even with Ghana, for example, that issued a government bond, they renegotiated the timeline. So if it's an honorable company or a blue chip company that has a reputation, they're not going to outrightly default. They're going to renegotiate the timeline. So that is why you need to go with a blue chip organization and not a random company. So I said that for the discount and implied yield, just focus on the discount yield. You don't even need to go into the technicalities of the different two. Just focus on the discount yield, because that's the actual return that you're going to get at the end of the period. So just focus on that. When you read the prospectus or the deal sheet, just focus on the discount yield. So for Vizient, you're asking, why has our interest rate increased? It's because the rate in the market has also increased. So the government is paying more for treasury bills. The government is paying more for government bonds. So like I said, anytime the government needs money, they increase the rates. So we then also increase our rates to match what is available in the market. And also because we're a licensed fund manager, we can also get a lot of securities at the primary market. And then because we run an investment cooperative, we pass on those margins to our members. So I mentioned that CPs are typically not meant for retail investors, but that's not how it's positioned in Nigeria. Why is that the case? I think that's a rhetorical question. Because it's like asking why are things the way they are in Nigeria. So I'm not sure I have an answer for you. I think you should look at your environment and come to your conclusion. Okay, what percentage of the Vision Dollar Fund is invested in Euro bonds, and what's the easiest? So the easiest way of investing in a Euro bond is to go through an asset management company. Any asset management company will offer a Euro bond. Depending on the minimum, sometimes they would say you need a minimum of $50,000 or you need a minimum of $5,000. So go to any asset management company. And if you indicate an interest in investing in Euro bonds, they will tell you what is available. They will run the numbers, tell you the rates, and then they'll tell you the minimum amounts that you need to start. How does commercial paper compare to other investment opportunities? I would say it's medium risk. So if it's a blue chip company, it's relatively safe because, like I said, blue chip companies care about their reputation. So if it's a blue chip company, it's medium. Very few blue chip companies are going to default. So just look at the company before you invest. But if it's a random company, it's a 50-50 chance. Okay. What would be the adequate yield for a commercial paper? Currently, it's about 23 to 24%. So that's kind of like what the rate is now. It can go up or go down depending on the company that is involved. If it's not a blue chip company, they will typically give you a higher rate because they are pricing in the risk. So they know that they're not a blue chip company, and if they want you to take on that level of risk, then they must be willing to give you a higher return to compensate you for that risk. So that's why sometimes you see an unknown company giving a higher return, and that's because they know that it's risky and they're trying to compensate you for that risk. In terms of the credit rating, so typically you would have things like AA, which is like the highest rating, B and then C. So it keeps going down from A. So again, once you read the credit report will explain the rating. So once you read the credit report, you'll actually just see the rating, and then there will be a note from the rating agency that explains what the rating is. AA, of course, anything that is A will be the highest quality in terms of the type of company and the type of credit worthiness that company has. So credit worthiness just means that the company not only has a history of repaying its obligations, but it has assets and it also has cash flow that positions it to repay its obligations. So any company that is A-rated typically has a history of repaying its obligations. So that's why I said most blue chip companies will be rated A. And because of that, they're at least a good bet in terms of investing in commercial papers. How does offering a commercial paper differ from a company encouraging or advertising their stocks? Because a commercial paper is quick. You don't need any sort of security from the day you decide to list a commercial paper to the day it becomes live. The turnaround time is pretty fast, and you're not giving equity. Once you issue stock, it means you're actually giving up equity in your company. Everybody owns a share in your company. Even if it's a minimal share, people still own equity in your company. But with commercial paper, nobody owns equity in your company. So that's the difference. Mutual funds like money market, are they in the same category as commercial papers? No. So what I was showing you are the different instruments that are available in the market that are priced similarly to commercial papers. Again, I'm sure the recording will be shared as well. So you can also freeze it at that point in the recording and just see that they're not in the same category. I'm just showing you that if you were to invest in Naira today, and you want things that are relatively low to medium. So I didn't include things like stocks because stocks are high risk. But if you want anything that is kind of low to medium, then that's kind of like what you should look at. So that I think I've answered that question. And are there companies that give you equity as part of the return? No, a commercial paper is not an equity investment. How do you compute the interest in CPs the company offers based on what they want to pay? So there is no global formula for computing the interest in a CP. Okay, I think some people want to see the comparative table again. Maybe I would just show it at the end of the Q&A just before we kind of round up. But the recording will also be shared. So please, once you get the recording, just kind of fast forward to the relevant place. CPs are non-principal guaranteed. Yes, there's no collateral. A company is offering 28% yield. Please just check for the discount rate. So the implied yield may be 28%. Just look for the discount yield. Usually, if it's 28% as an implied yield, it may be about 25 or 24 point something as the discount yield. So it may not be fishy. Like I said, if it's not a blue chip company, they need to compensate you for that risk. So they would give you a higher return, because if they want you to actually take that risk, then they must compensate you. And like I said, for institutional investors, commercial papers are like 2% of their entire portfolio. So if someone is offering me 28% or 25% as an asset manager, I'm just going to weigh the risk. And I'm like, okay, what's the worst that can go wrong if I invest 1% of my entire portfolio in a commercial paper? Do you understand? So they've already kind of thought about it. So that is why for commercial papers are really for institutional investors or high net worth individuals, because they've already discounted the risk in their mind. If anything goes wrong with this money, I'm not going to cry, but for a retail investor, if anything goes wrong with your money, you're going to feel it. So that's why I said that for commercial papers, you need to know that for high net worth individuals and institutional investors, they are only investing a small percentage of their portfolio. So for them, they know what the risk is like. So a company is offering, I think I've answered this. So in terms of current CP listings, so for example, Fund Managers Association of Nigeria has an app where they list all the different offerings by asset management companies. I'm assuming it should be available on the Play Store or the iOS App Store. So Fund Managers Association of Nigeria, FMAN, they have an app, and all asset management companies list their products. So if there's any asset management company that has a commercial paper, ideally it should be listed there. But a lot of commercial papers are also advertised. So any asset management company that has a commercial paper, you might see it on their social media, or maybe the email list, because it's really not a retail product. So a lot of asset management companies, if you're on their email list, you typically would, get a copy, of the commercial paper when it comes out. You might see it in some, WhatsApp groups, or, just because once you verify, from the asset management company, you can actually tell that it's a genuine, commercial paper. But I know the FMAN app might be your best bet if you just want to get a sense of all the commercial papers that are currently available in Nigeria. Would an African American benefit from commercial papers? Yes. So like I said, if you have, some funds and you've kind of, priced in the risk. I gave an example that there are some people who invested in commercial papers at the point where the Naira was quite stable. I think it was hovering around 1,500. And if you had invested in it at that time, maybe you had brought in dollars, changed to Naira and invested in it, and it remained relatively stable, and you were able to change your Naira back to dollars before exiting, definitely you would have made a huge margin, in dollar terms. But that only works when the Naira is stable. So a lot of times you have to kind of just know that. So let me run quick numbers for you so that you can see what I'm talking about. Right now, dollar is at about 1,600. Let's just, approximate and say it's at 1,600. If a commercial paper is giving you 23%, at what point will those gains be completely wiped out? So if I add about 23% to the Naira rate, as long as Naira does not rise to 1,968, you are safe. So what I've done is that I've priced in the percentage below which Naira must not fall relative to dollar. So if I'm coming as an American and I have dollars, and I invest in a commercial paper, I change my dollar to Naira at 1,600. As long as Naira does not crash to the point where it's exchanging at 1,968, you are okay. Because at least within that window, as you can change your money back to dollars without losing significant value. Because if you earn 23% on that commercial paper, you already have a margin. You can play with it. So, but like I said, that's not the kind of thing a retail investor will be doing. Like, who will be remembering 1,009? Like, I'm running the numbers quickly because I'm an investment professional. So these are the numbers I use every day. But for an average retail investor, who is going to be remembering 1,968, who is going to be checking exchange rates every day, like who is going to be doing that work? So if you're not a financial professional, you may not want to play with those numbers. But for institutional investors, we have the capacity to do that because we typically will have a research team, and that's their job, to be feeding us these kinds of numbers and taking quick decisions. So the minute Naira begins to fall, trust me, we're already changing our money back to USD because we have that information and we know what to do to kind of exit the market very quickly. So please, if that's not you, don't go there, please. When does the interest rate show on Vizient dashboard? So now we're introducing a quarterly update so that you can see your interest every quarter on the dashboard. So we announced that on the WhatsApp group, on the community WhatsApp group. If a well-known asset management company states that a commercial paper is principal guaranteed, is that a red flag? Oh, of course, that's a red flag. A commercial paper is not principal. So maybe they are guaranteeing it on behalf of the company. That could be an option. So read the details. Are they the ones guaranteeing it? So maybe they have an underwriter. So let me not make a blanket assertion. It could be that they have an underwriter who is guaranteeing that investment. So just ask them, how are they guaranteeing it? If they don't tell you it's an underwriter, or they don't tell you that they are the ones guaranteeing it, then it is a red flag. Because they must tell you, because if the company did not put down collateral, what are they using to guarantee it? So just ask, go with an open mind. You don't be suspicious. It could be that they've created a structure that guarantees the investment. And what would be a good percentage of a retail portfolio to be invested in? So I said about, if it's non-principal guaranteed, your risk level. So for maybe my portfolio, anything that is non-principal guaranteed, I could say maybe 10%, because I've kind of capped it that, okay, at the most, I can't lose more than 10% of my portfolio. So you make that decision based on your risk appetite. What percentage of your fund do you want to expose to a non-principal guaranteed investment? So I think we've kind of answered all the questions, at least the ones in the Q&A box. We've really tried to answer all of the questions. And I think someone put in the chat, was the minimum. The minimum amount for a commercial paper, I think some of them typically 200,000 Naira, some of them 50,000 Naira. So usually they'll put it on the prospectus or the deal. The deal sheet is a one-page version of the prospectus. So when I say deal sheet, I actually mean that one-page summary that typically goes around on email and on WhatsApp groups. That's the deal sheet. But the prospectus is a booklet, typically has all the ratings reports, company profile, financials, and all of that. So typically they will tell you maybe 200,000 naira, depending on who is issuing the commercial paper. And you can do multiple amounts once you miss, you meet the minimum. So I think we've tried to cover as many questions. Somebody asked that I just share the page. Let me just try to open it on my end, and then just to kind of share that page again, and then we'll close with that. So I think we've tried as much as possible to answer. If there's any other question that I haven't answered, please come to the WhatsApp group. So the money market fund, I'm just seeing one more question. So money market funds, they calculate the interest daily, but what I've done is to annualize it. So if you look at a 1 year period, if you've had a money market fund for 1 year, just check how much you made in the entire year. Once you annualize it, you will get a sense of the return over a 12-month period. But like I said, money market funds are very flexible because I think the minimum holding period is just 30 days. After that, you can take out your money at any time. Fixed income funds such as ours, there's a minimum holding period of 12 months, and that's what allows us to get the higher return. Because if you lock in your funds for a longer period of time, you can negotiate a higher return. So that's what we've done for our members. So let me just share that page again, just to kind of show you comparative. So like I said, I didn't include high risk instruments here. So just to kind of give you a sense of what the current rates are. And like I said, use the annualized return. So if the tenor is 9 months, divide the return by 12 and multiply by 9. So if you divide the return by 12, it will tell you how much the return is per month, and then multiply it by the amount of months for the investment. And in this case, for commercial papers, is 9 months. So this just to give you comparative rates. For our pool, the only reason we're able to give higher than average rates is because we pool all our funds together into one massive institutional fund. So we're simply using economies of scale. So we have millions of dollars under management. So because of that, we can go into the market and negotiate a preferential rate. So an individual won't be able to get these rates. They're not available. But because we pool all our member funds into one institutional fund, we can then go as an institution to negotiate higher rates for our members. So this is Naira, and then this is dollars, just to give us a range in terms of what is available in the market. Euro bonds, like I said, depending on some are 9%, some are 10%, so depending on what's being offered per time. But because they are long-term, by the time you annualize it, remember a lot of people don't collect their coupons. So Euro bonds will typically pay coupons twice a year. Some people reinvest the coupons and just compound it. So by the time you compound over a 5-10 year period, your annualized rate will be about 13 to 20%. But if you collect your coupons, twice a year and you don't reinvest it, you're probably just going to end up with the lower end of the return. So these are just the pages, and then I'm just going to go to the QR code, but I'm sure the team would have also kind of put the details in the chat box. So join the WhatsApp community. If you have further questions, just drop your questions. Typically we'll answer as they come in. And if you want to know more about our investment club, how we kind of pool our funds together so that we're investing as one institutional fund and getting higher rates for our members, then you can scan the QR code for our investment club and get that information. So I think my job is largely done. Hepzibah, I don't know if you want to close us out and any other information you might want us to hear about. Please go ahead.
Thank you very much, Subomi. What an insightful session. A big thank you to Subomi for breaking down such a complex topic in a relatable and practical way. I'm sure we've all learned something valuable and, more importantly, something we can act on. While the webinar may be ending, the conversation doesn't have to. So please click the link in the chat or scan the QR code on your screen to join our WhatsApp community. It's a space where we can ask questions and about our investment clubs and stay plugged in with like-minded investors. Thank you once again for spending time with us today. Until next time, stay curious and stay invested. Bye for now.